Markets lose early gains. Nifty off opening high slips below 21,700 mark. Sensex below 71,900. Broader markets in tandem with benchmarks. Mid-cap and small caps off their record highs. Nifty IT top sectoral gainer up 1.5%. Healthcare and pharma packs crack. And private lender HDFC Bank sees slow growth in its Q3 deposits. The bank adds over 41,000 worth deposits in the December quarter. And Gautam Adani reclaims India's richest title from Mukesh Ambani. The group stocks added over 12,000 crores market cap in today's day of trade. And India is on its way to become a developed economy, is the word coming in from Aditya Birla Group's Kumar Mangalam Birla, adds the government is making all the right efforts. Hello and welcome. You're watching Hot Money. I'm Agam Vakil, and this is the show where we take you through all the sectors and stocks which are buzzing in trade. A quick look at the markets, which have had a relatively quiet morning, but on the whole, a little bit of weakness also seeping in towards the last 1 hour of trade, at least as far as the benchmarks are concerned. The Nifty currently marginally in the green, but the Bank Nifty is now down by 2.2% at the moment. We're seeing a little bit more volatility as far as banks are concerned, and while they did start off with a bang, do remember, largely on account of a whole host of Q3 updates coming in, well, we have seen a little bit of a moderation since then. And of course, when it comes to the broader markets, we are keeping an eye on a whole host of companies out there. The broader markets have also moved largely in tandem with the benchmarks, but at the moment now they're outperforming them to a certain extent. So you do have a 0.4% gain for the mid-cap index. The small-cap index as well is up and about by just as much, about 0.5% gain for that one as well. Want to quickly take a look at all the stocks which are buzzing in the broader markets. And in terms of the top gainers, we have Tube Investments now. Tube Investments is up 5.4% as we speak at the moment, doing well in today's day of trade and on good volumes too. That's followed by NHPC. NHPC is the other counter, which is also trading near days highs, up around 4.3%. It has given up to a certain extent as compared to what we saw earlier in the morning, but well, gains all the same. And then we have Motherson Wiring. Motherson Wiring is also advancing in trade today, up around 4.1%, followed by Yes Bank, and that's largely what we have in terms of advances as far as the broader markets are concerned. On the other hand, in terms of those stocks which are looking at weakness, Max Healthcare down by around 3%. Gujarat Fluorochem, which has been on an uptrend, so to speak, over the past couple of weeks, in fact, is now under pressure and is down around 2.4% right now. Do remember, just a couple of sessions ago, it did, it was well over 3,800 rupees per share. Of course, it's missed out on that one now, and it's slipped below that mark, currently at around 3,700. So keep an eye on some of these counters as we continue to move into trade today. And on that note, I'm going to very quickly address all the themes that we want to talk about. So we do want to talk about banks, of course, and along with HDFC. We also want to address what's happening with the real estate sector as well. We have a whole host of updates coming in from there too. Of course, Kalyan Jewelers and the jewelry sector, Dabur in the FMCG sector, NTPC along with Hindustan Aeronautics as well from the defense sector. And to take us through that, we are also going to be in conversation with Hemang Jani, who is an independent market expert. Hemang, good afternoon, and thanks so much for joining in. Hemang, I'm going to come to you in just a bit. Let me first address what's happening with the financials, and let me get in my colleague Harsh to give us an update on the same. Harsh, can you take us through all the quarterly updates that have come through in the sector?
Well, let me first start off with HDFC Bank, because that was, the big one. now almost 15% of the Nifty is what HDFC Bank actually comprises of. And, with regard to advances, it was a good set of numbers, 5% growth on advances. This somewhat, in my view, also indicates the fact that on a higher base, HDFC Bank is still able to grow. 5% sequential is quite impressive. Now, the granular numbers, let me come to on the what exactly is pushing this growth forward. One is the commercial and rural banking segment of HDFC Bank growing at 6.5% sequentially. Mind you, this is roughly 25% of HDFC Bank's combined loan book, which is the merged entities loan book. And that's quite a sharp, growth number that we're continuing to see on that. It has grown at 7% sequential. So, of course, one needs to keep an eye out on whether it can continue to grow at that rate. The other piece, of course, is with regard to retail loans, up 3% sequentially. Corporate also this time showed a bit of an uptake, 2% sequential growth on the corporate front. Deposits were a bit disappointing, 2% growth on the deposit side of things. And within that, retail deposits grew by around 3% or thereabouts. So that was one positive among the deposit growth number. The wholesale deposits have actually shrunk. So that's something that we'll have to, of course, await further clarity on. Quickly moving on, L&T Finance was the other one, 31% year-on-year growth with regard to AUM. Retailization there continues. Disbursements continue to remain quite strong from an L&T Finance perspective. Utkarsh Small Finance also, again, 31% growth year over year with regard to loan portfolio. Of course, is newly listed as well. Deposit growth, though, just about 18%. So clearly trailing. There's a huge delta between loans and deposits. How do they bridge it will be the key question here. RBL Bank also 20% loan growth, 13% deposit growth. Fairly steady set of numbers, but that gap again will be something that RBL Bank will want to bridge. J&K Bank 14% loan growth, 9% deposit growth, both of which were below what the industry is growing at, giving up some of its market share. But the CASA ratio is above 50% for this one because it has that very strong franchisee in J&K. So all of those, of course, in focus today.
Right. Thank you so much for that, Harsh. Hemang, good afternoon. Let me start off with your view on the banking sector as a whole. What is your expectation when it comes to the sector? And if you, in fact, do find value in a handful of these names, specifically perhaps from the private sector space?
Good afternoon. Thanks for having me. I think clearly banking is one sector where there is a comfort both in terms of the earnings for this year. In fact, of the incremental earnings for FY25, 40% is going to be contributed by the banks and the financials. So that is something that is giving comfort. At the same time, the valuation at an aggregate level is far more comforting. And that makes that as one of the best placed sectors for investors. Now, coming to the ideas that we make at this point of time within the banks, of course, PSU banks will be at the forefront of that. And State Bank of India, Canara Bank, Bank of India. These are the names that we like when it comes to PSUs. Within the private sector banks, we like ICICI Bank and Federal Bank, I think, and even Axis Bank. So I think clearly, there is a larger degree of comfort when it comes to banking.
All right. From there on, we move on and talk about the real estate sector. We have two updates coming in, one from Soba and the other one is from Macrotech Developers. I have my colleague Anushi who's joining us to give us an update on the same. Anushi.
Right. So I'll start off with Soba first, wherein the company has reported about a pre-sales growth of 12% at rupees 3,410 crores, while the company's 9-month FY24 pre-sales stood at about 10,300 crore on track of its guided 14,500 crore. The collections, however, were down about 3% for Macrotech. While the company reported an intraday high of 9%, it reversed its early day gains and it's now about 0.5% up. Now, coming to Soba Limited, the company achieved about a 37% pre-sales growth at rupees 1,952 crores, while the average price realization saw about a 14.8% growth. The company did update that it has launched 2 new residential projects measuring about 3.83 million square feet. Some profit booking over here, while the company did report a phenomenal run yesterday. So those are the 2 stock updates for today.
Thank you so much for that, Anushi. Hemang, it's been a staggering run for the real estate sector, and clearly the sector of the year, and it continues to move even higher. But a lot of market participants are now factoring in even more robust sales. The question really is that would you be circumspect on the sector, or is there much more in terms of the rally that we can expect when it comes to the sector going ahead?
Happens is that in a bull market, there are sectors which are leaders where you see strong momentum, and at times you may get a sense that, okay, in terms of valuations or the sheer absolute gains, it has run its course, but that would be a bit tricky situation. So my feel is that we have a lot of headroom when it comes to the earnings and this entire bull market, and real estate being at the forefront of that. We will have to participate by having maybe some allocation towards that. Either it will be through some of the large Mumbai-based developers, maybe Lodha, Godrej Property, or some of the Bangalore-based names, maybe Brigade, Prestige, so on and so forth. But the participation is very crucial because we think that given the momentum, the fresh sales in terms of the new projects pipeline and the kind of earning visibility which is there, surely there is much more upside with some minor corrections on the way.
Okay. Well, we shift focus to Suzlon Energy then, and that's advanced by around 2% after the company's bagged a 225 megawatt wind project. And we spoke to the CFO, Himanshu Modi, on the company's execution plans. This is what he had to say. Listen in.
I think, from a financial perspective, we've ticked all the boxes. I think, from a branding perspective, Suzlon has a, huge brand recall and brand promise with our customers. Ability to execute always existed within the company. So there's, never been a doubt on that front. So from a timing perspective, I think, all ends have met, and, it's just about waiting it out over the next few quarters to see how profitably and effectively are we able to execute. Having said that, there are, of course, challenges on ground in terms of execution. It's not a cakewalk, and it's not, an easy business to install turbines. But I think Suzlon's learning and understanding, its people, its experience, all come in handy towards meeting those challenges.
All right, and on that note, it's time to take a short break, but don't go anywhere. We'll be back in just a bit. Stay tuned to NDTV Profit. Welcome back. This is Hot Money, and now we address Dabur. That's also come out with its quarterly updates, and we also have a Citi which has maintained the sell rating on the stock. Now, do remember that Dabur has been struggling with respect to top-line growth as well as its volumes. The other factor here is, of course, that Dabur has a wide range of winter products, and in this case, it does seem like the quarter hasn't been up to satisfaction, which is why at least some of these experts on the street are just a tad bit circumspect with respect to this company. It's not like it's one of the most cheapest of the FMCG pack, certainly not very expensive either. But really the question at the moment is, what do you do with Dabur? Now, in terms of what the quarterly update had to offer was that the consolidated revenue will be estimated to about mid to high single digit. And moreover, they do see early signs of revival in consumption, but that really hasn't panned out as far as the winter season is concerned. And the company is likely to post a 7% consolidated revenue growth and about 9% earnings growth in Q3 FY24. Is this satisfactory? That's something which is going to be a wait and watch, and perhaps a lot will also depend on the kind of profitability that the company comes through, especially when it comes to margins. Hemang, if I can actually pose a question to you, if you have a view on Dabur in general and also the entire FMCG pack with the way things stand, because it's not like we've seen a substantial recovery specifically from the rural sector.
When we talk about FMCG, I think if you look at the price performance of some of the prominent FMCG stocks, they have done pretty well in the last 2 or 3 weeks. Broadly, the sector has underperformed the Nifty over a last, let's say, 1 year period. But clearly, you're seeing a bit of a momentum come through the business updates that we've seen so far, let's say from Dabur, has not been that great. And if you look at the commentary, rural side is not showing any meaningful traction. Also, quarter on quarter, many categories have not really participated. So our view is that you should have participation in FMCG because as a part of the sector rotation, definitely the sector would do well at some point. There is a lot of stability that one can expect. And there are 2 names that we prefer. One is Tata Consumer, which has been a outperformer for a fairly long period of time, both in terms of stock price and the actual performance. And the second one is ITC, which is cheaper compared to some of the prominent FMCG companies, maybe HUL, Dabur, Britannia, etc. And where we are expecting a decent quarterly performance.
Okay, and from there on we move to Kalyan Jewellers. Now this of course is something on expected lines, perhaps a strong quarter indicated in its quarterly numbers where India's operations revenue growth stood at around 40% on a year-on-year basis, and the company also added about 22 new showrooms on a net basis, of course, new Kalyan showrooms. Hemang, do you have a view on Kalyan Jewellers and perhaps some of its relatively larger peers like Titan?
So we have a view on the discretionary consumption space, and we do feel that the organized jewelry market will grow both in terms of the overall volume as well as the market share gains from the unorganized segment. So, 2 companies we prefer. Number one is Titan. I think there is a long way to go in terms of market share gains, in terms of the further expansion that the company has undertaken. The smaller jewelry brands that the company has acquired, I think a combination of all this will start playing out. It's been one of the best performing stocks and must have in the portfolio from a compounding perspective. The other one that we like is Sensex. I think the company did the IPO, the stock has started doing well, but when we look at the opportunity, when we look at the gap between a Titan and some of the smaller companies, it's huge. So I think Sensex is something that we like. Apart from Titan, Kalyan Jewellers, we don't have a coverage, so I won't be able to put out any rank.
Okay, well, on that note, it's time for another short break. We'll be right back. Stay tuned in. Welcome back, and now we put the spotlight on the power sector, specifically NTPC, which is in focus, as well as the Central Electricity Regulatory Commission in its draft tariff norms for FY25 to 29 has raised the return on equity for new storage-based hydro projects. Of course, hydro projects, when it comes to NTPC, is just one of the many segments that it is into. And we must also remember that NTPC is also expanding its renewable energy, that is, its non-thermal or non-coal-based power production, and that perhaps bodes well for the company. Hemang, if you do have coverage on NTPC 1, and with respect to some of the other private sector power producers, NTPC hasn't run up as much. It does seem like there may also be relative value in this one as compared to something like a Tata Power or JSW Energy. Are you of the same opinion? What is your view on this?
It's been one of the main sector which has done very well over the last, let's say, about a year or so. And given the NTPC's positioning, both in terms of thermal power as well as its plans to move into renewables, is quite encouraging. Also, from the government side, if you see, there are a lot of reforms that the government has announced, and NTPC will be one of the beneficiary of those reforms. So we think that, from a allocation perspective, it would be good to have NTPC, as a part of the portfolio. Stock has run up quite a bit, but we think that given the new positioning which is there from government side and renewable part, there is a scope for another 15 to 20% kind of an uptick in a stock like NTPC.
All right. Of course, we must also remember that from what we understand, the CERC has also agreed to compensate all the power producers who import coal. And that, of course, is the other factor which may, in fact, play in favor of some of the thermal producers, NTPC being one of the major ones. But on that note, Hemang, I want to take a moment to thank you for joining us and taking us through your views on the markets and the many stocks and sectors that we spoke about. And on that note, it's a wrap on this edition of Hot Money. Stay tuned to NDTV Profit, and we'll keep bringing you more.